$5,195. Say that number out loud. $5,195 for a single ounce of gold right now, today, March 4th, 2026. And you know what? The market's just closed. Gold finished the session up 1.4%, silver rocketed back 3.3%, and the whole world is watching the Middle East like it's on fire. Because honestly, it kind of is. And here's the thing that nobody's talking about on mainstream financial TV right now. This may only be the beginning. Because here's what I want you to understand before we dive in. We're not just watching a price move on a chart. We're watching something that happens maybe once or twice in a generation. A full-scale geopolitical reshuffling of power, energy, money, and trust. And precious metals, gold and silver, are the language the global financial system speaks when it's scared, when it's uncertain, when it no longer trusts paper promises. And right now, the world is speaking that language loudly. Welcome back, everyone. I'm Yali Jiang, and this is Silver Signals, your home for real, honest, deep dive analysis on gold, silver, and the kind of wealth-building strategies that actually work when the world gets complicated. If you're new here, welcome to the family. Hit that subscribe button right now because what we cover here, you are simply not going to find explained this clearly, this honestly, anywhere else on YouTube. And if you've been with us for a while, thank you. Seriously, let's get into it. Today we are breaking down exactly what is happening with gold and silver prices right this moment, why this Middle East conflict is driving a massive safe haven surge, and what the US dollar and Treasury yields have to do with all of it. Most importantly, we are covering what the smart money is doing and what you should be thinking about for the rest of 2026. We've got a lot to cover, so let's not waste a single second. Let's set the scene because context is everything. On February 28, 2026, coordinated US and Israeli strikes hit Iranian targets, and that was the spark. Gold immediately surged over 2% in a single session, pushing prices from around $5,100 to over $5,300 per ounce. One session, over $200 gained. And since then, we've been living through what analysts are now calling a full-scale Middle East war, day 5 as of today, involving the United States, Israel, and Iran, with oil prices spiking, currency markets rattled, and the global investor community doing what it always does when uncertainty peaks, running to gold and silver. Now, today specifically, March 4th, gold closed at $5,195.30, rising $71.60 on the session, which is a 1.4% single-day gain. Silver, meanwhile, bounced back 3.3% after pulling back in previous sessions. And think about that. Silver just made a 3% move in a single day. For investors who understand silver's leverage potential compared to gold, that is not a small thing. That is a very big deal. But here's what I want you to really grasp. This move today didn't happen out of nowhere, because there was a brief pause in the previous session where some people started wondering if the rally was over and whether we had hit the top. And today the market answered that question with a resounding yes. The dip buyers came back in force. And the reason is because the fundamental backdrop, the geopolitical heat, the inflation pressure, the energy market chaos, none of that has gone away, and if anything, it's intensifying. According to reporting from the New York Times, Iranian intelligence reportedly reached out to the CIA to discuss terms for ending the war, but US officials remain skeptical that either side is truly ready for de-escalation. And separately, news broke that a US submarine sank an Iranian warship. So we're not looking at a conflict winding down. We're looking at a conflict that is still very much alive, still escalating, and still feeding fear into global markets. And fear, in the world of precious metals, is fuel. Now, let's talk about the dollar and Treasury yields, because these two forces are like the tide underneath the gold boat, and you need to understand how they interact. A lot of people think gold just goes up when there's war, and yes, broadly that's true, but the speed and magnitude of the move is heavily influenced by what the dollar is doing and what bond yields are doing at the same time. So let me explain this in plain language, because this matters to every single investor watching this, no matter what country you're in. When the US dollar gets stronger, when its value rises against other currencies, gold technically becomes more expensive for buyers using euros, yen, rupees, yuan, and every other currency. So a strong dollar can act as a headwind for gold, and that's what we saw in the previous session when dollar strength helped pull gold back from recent highs. But today, the dollar slipped. The DXY fell about 0.1%, and in a high-tension market, even a small dollar pullback gives gold and silver room to breathe, making greenback-priced gold more affordable for buyers using other currencies. And Treasury yields, this is really important. When yields on US government bonds are high, they offer investors a real return just for holding them, which means the opportunity cost of holding gold, which pays no interest, goes up. That pushes some investors toward bonds away from metals. And that dynamic was creating real pressure in previous sessions. But here's the thing. When we're in a full-blown geopolitical war environment, when inflation fears are spiking, when oil prices are surging, Treasury yields start to look far less appealing, and investors start asking what good is a yield if the dollar behind it is getting devalued by inflation. Investors start asking what good is a bond if confidence in U.S. financial stability is being tested. And when that question gets asked, that's when gold's true appeal comes roaring back. As market analyst Jamie Dutta put it, after the past few days of position unwinds and dollar strength, markets are back to a more typical macro risk-off stance with silver higher too, and a pause in the rise of the dollar and Treasury yields helping to reduce their opportunity costs. That's exactly the dynamic we're living through right now. And as long as the conflict continues, as long as oil prices keep climbing and inflation expectations stay elevated, this dynamic very likely continues to work in gold and silver's favor. Now, I want to stop here for a second because I'm genuinely curious, and I ask this with real interest. Drop a comment below right now and tell me, are you currently holding physical silver, physical gold, or are you in ETFs and mining stocks? Or are you still on the sidelines watching all of this unfold? I read every comment on this channel, every single one, and the reason I ask is because what you share helps me understand where the Silver Signals community actually stands, and it helps me create content that serves your real situation. We've got people watching from dozens of countries, and I genuinely love knowing what you're doing with your money in real time. The reason I ask is because your answer changes what kind of content I focus on, whether that's entry strategies, storage tips, which metals to prioritize, or how to navigate volatility like what we're seeing right now. So please, take 5 seconds and tell me. It genuinely matters to me and to this community. Let's talk about silver specifically now, because silver deserves its own conversation. And honestly, this is the one that really excites me. Because here's something most casual investors miss completely. Silver is not just a precious metal. It's an industrial metal too, used in solar panels, electric vehicle batteries, advanced electronics, semiconductor manufacturing, and medical technology, and the list is long and growing. Silver has a dual demand driver that gold simply doesn't have, and when you layer wartime inflation fears on top of already strong industrial demand, that combination can produce price moves that make gold's gains look modest by comparison. Look at today. Gold was up 1.4%, silver was up 3.3%, more than double gold's gain in a single session. Analysts tracking silver's technical structure are pointing to a strong rebound from key support at around $72 in February 2026, suggesting the price is likely to continue pushing toward the record level of $120, and potentially higher toward $150. The strong volatility and safe haven demand drive the broader bull market. That kind of technical confirmation, combined with the macro backdrop we've been discussing, is exactly what makes silver such a compelling conversation right now. Now, I always want to be responsible with you here, because I'm not a financial advisor and no price target is guaranteed. But I will say this. The structural case for silver being undervalued relative to gold has never been stronger. The gold to silver ratio, how many ounces of silver it takes to buy 1 ounce of gold, is still historically elevated, and that gap historically closes over time, and when it does, silver tends to dramatically outperform gold. We may be watching that process begin right now, so keep your eyes on it. Let's zoom out to the bigger picture, because this is where things get really interesting. Gold has already gained approximately 23% year-to-date in 2026, following a rise of roughly 64% throughout all of 2025, far outpacing the S&P 500's 16.4% gain last year. Let that sink in. In a year when most traditional investors were nervously watching stocks, the people holding gold and silver were sleeping extremely well at night. And that outperformance is not an accident. It is a direct reflection of the world we're living in. And now, JP Morgan analysts have come out with a forecast of gold reaching $6,300 per ounce by the end of 2026, noting that while conflict-driven surges in gold come and go, geopolitical risks broadly are likely to stay elevated. And this underpins their bullish long-term outlook. Paused. Think about what that means. If they're right, we're roughly 20% away from that target right now. And JP Morgan is not a fringe newsletter or a gold bug blog. This is one of the most powerful financial institutions on the planet, and they are telling their clients to take gold seriously. And this brings me to something crucial that doesn't get said enough. Central banks around the world accelerated their gold purchases through 2025 and into 2026, with nations across the developing world seeking to diversify reserves away from dollar dependence and protect against currency volatility, creating a powerful structural floor under gold prices. When the world's biggest, most well-resourced financial players are making that bet, accumulating an asset that belongs to no country, owes nothing to any government, and cannot be frozen, sanctioned, or inflated away. That tells you something profound about the long-term direction of this market. This is not speculative retail money chasing a trend. This is strategic institutional and sovereign accumulation at a global scale. Now here is your aha moment, the one thing I want you to carry with you after this video, and it connects directly back to what I opened with. We started today talking about $5,195 per ounce of gold. That number sounds extraordinary, but here's the twist. And I genuinely believe this is the most important perspective shift I can give you today. The price of gold in dollars isn't telling you how valuable gold has become. It's telling you how much purchasing power the dollar has lost. But pause. Think about that. Gold doesn't change. An ounce of gold today is exactly the same thing it was 50 years ago, 100 years ago, 5,000 years ago. And what changes is the currency it's priced in. In 1971, when President Nixon ended the gold standard, an ounce of gold cost $35. Today it costs over $5,100. Gold hasn't gotten $5,000 more valuable. The dollar has gotten that much weaker. And that is the real story hidden inside every gold price move you see on a screen. And that's why, no matter what happens with this Middle East conflict, whether it escalates or reaches some form of ceasefire, the underlying reasons that thoughtful people around the world hold gold and silver haven't changed one bit. War or no war, rally or pullback, the fundamental case for precious metals as a store of value, as a hedge against the slow erosion of paper currency, as financial insurance in an unpredictable world, that case gets stronger with every year that passes, not weaker. The $5,195 number isn't the headline. The headline is, why are we still surprised when gold does exactly what it has always done? Protect the people who hold it. All right, let's bring this home. Today, gold closed at $5,195, up 1.4%, as the Middle East war entered its fifth day and safe haven demand returned with full force. Silver surged 3.3%, demonstrating exactly the kind of explosive leverage that makes it so compelling at this stage of the cycle. The dollar eased, Treasury yield pressure relaxed, and dip buyers confirm this rally still has legs. The structural backdrop, central bank buying, inflation pressure, dollar debasement, geopolitical tension, hasn't changed, and JP Morgan sees gold at $6,300 by year end. Silver technicals point toward $120 to $150 per ounce, and the gold to silver ratio suggests silver may be the bigger opportunity for those paying close attention. Every single piece of this picture is pointing in the same direction, and the people who understand that are positioning themselves accordingly. Most importantly, and I'll say this directly because it matters, if you don't yet hold any physical gold or silver, this is a moment worth genuine reflection, not as financial advice, because I'm not your financial advisor, but as a fellow human being who studies these markets every single day, and who genuinely believes every person in the world deserves to understand the power of owning real, tangible money that no government can print away. This is the kind of moment that people look back on years later and either say they were paying attention or wish they had been. If this video gave you a new perspective, if it helped you understand what's happening in the world right now and why it matters to your financial life, please hit the like button because it genuinely helps this channel reach more people who need this information. And if you haven't subscribed yet, now is absolutely the time. Click that subscribe button, ring the bell, because we post regular, serious content to help you navigate exactly this kind of environment. And I don't want you missing a single thing. Your support is what keeps this channel going and keeps this information free for everyone around the world. And if you dropped a comment earlier about your current precious metals position, thank you, truly. That community conversation is one of my favorite parts of running this channel. If you haven't commented yet, please do. Tell me what you're watching, what you're holding, what questions you want answered next, because your voice shapes what we cover here. I'm Yali Jiang. This is Silver Signals. Stay sharp, stay informed, and I'll see you in the next one. Take care of yourselves out there. Pause. Warm smile to camera.